Hi, good day. I'm from Crypto Warlord, and today we'll be looking at some XRP USDT with regards to how it's pretty much not decided to rally through the levels that we previously identified to the upside, and we've already broken to the downside through the levels we already outlined to the outside. Okay, so this is just going to be for a quick view. We're going to throw up the 45 minutes and we're just going to see where it is, because it's just printed. We've had some volatility, a few snakes for the last couple, 3-4 hours in this region here. So we have a return oscillator that is wanting to mean revert to the downside. This is on the 45 minute. Then we have a trend that's looking to increase. We haven't had some red flashes in this region, so there is still opportunity to have another short come in. Okay, take the flash, take the trade once the flash is done flashing. Yep, and that's up. So this is showing confusion. So then we're going to pop onto the 90 minute. We'll just quickly throw up these regions. There we go. This is where we previously looked at price action. The previous video we were pretty much in this region here, and pull up, it got to at least a little higher than our VRE level that we have in here, which I'll switch on. Got a little bit higher than that and decided to turn itself all the way back down. Come visit our daily mean from a previous data. At least before the new daily printed, it pretty much went for the daily mean. So that was pretty much a telltale sign, and that was just because Shannon Entropy didn't have the legs to break us up through these higher highs, right, in this region. So that was a pure observation off of knowing how much steam is left in your indicators, and knowing that it's going to be very hard to break high. Doesn't matter how well it's pitched. And now we're back down in our market structure that we were talking about previously. We've worked onto the top of it, at least. So this is a region in which you can maybe start to see some basing off of. So we have some big selling wicks coming in, matching some buying power here. So this point of the market did want to find itself. You can go throw up a whole bunch more other indicators to verify why we're down here. And this will pretty much sum up one of our monthly levels. As in this region here, this is a weekly level. Here's your monthly mean. So happy days, man. We called it. So we're sitting below our monthly mean at the moment. And yeah, as you could just imagine, for longer term trends, if we close above the monthly mean, we can go up, which we have a daily mean up at the top side here. So for it to break through this yellow line again at 3636, you could expect at least a touch, which would make a lower high, which can send it down again, or vice versa. That's a higher high. If it breaks this region over here, it's going to want to hang in on the daily mean to try and push higher. If it comes up, it will smoke this red line and maybe get shorted, thus making a lower high, and your return oscillator can throw in divs and stuff like this. So this is the range that we're currently looking at. If we break from this region, wherever we are, we're coming into a red line, 3559, a little bit of a catch of a wick, then push back up into this yellow line. So wherever you see the yellow lines, I trade them as magnets. So when we go away from them, depending on the direction, there's a couple more magnets to the upside, right? So it would want to naturally pull itself up to the upside. But then we've got to go start looking for things like positive and negative drift, the direction of volatility. Is it all expanding in the same? Is volatility and price action expanding in the same places that I have these magnets? Okay, so that's generally what I'm looking out for here. So we have a 90 minute. Our 90 minutes come up, and how I would use this mathematically, well, not mathematically, just with the tools I use, I would go and say, okay, so my next observation will be, if the 90 minute turns around, this one will go green, right? If that goes green, then that candle where this one goes green, whilst it's still above the mean, has to close above the daily the monthly mean, right? So once it's closed above the monthly mean, and my return oscillator's turned around, then I know that they can defend this return oscillator at this point. So you can, if you know that it's going to go up, you can scalp into it, and then you can maybe get a better position with a little bit of extra profits if you want to go long into this region. Vice versa, if this carries on going down and it stays below this monthly mean, then I'll say, okay, how far away until when volatility picks up, so we're contracting positively correlated, so this can float down a bit, okay, so how long until what, that's it's about 3 candle prints from now on the 90-minute to get us over here. So given that we just have a whole bunch of three candle moves on the 90-minute that are quite big in range, percentage terms, you can imagine that it's not a far fetch for us to get to 3587, and by the time, if the candles do get there, you'll see that this thing, a return oscillator, will be at the mean reversion point, okay? So then if it doesn't defend this region and mean reversion breaks, and I can see that the candles match up with my weekly levels, then I know that it's going to push through, okay? So there's a whole trade to be made in here, and that's just 90-minute on our ranges, looking to grab ourselves into these magnet levels a little bit lower if you need to. So 45 minutes, what we can see here is a little bit of turning down action. So in order for this to not be true, or how I look at it, for this to have a lot of power, is as long as these candles, so it's a couple pennies, as long as the next few candles carry on closing below the monthly mean, this is going to get very, very hard to defend when it comes to the mean reversion point, because it's below the monthly mean. So any buying power that comes to defend the mean reversion point can get sold out into this region, okay? So as I say, 2 or 3 candles, this needs to charge up here, and then it will show you that it can use this line to defend this mean reversion point, okay? So that's another 2 candles away. Let's go look at our 5-day. Sorry, that was a 45-minute and 90-minute. I just wanted to get that done because those guys are highly important to me, and I like to look at them with fresh eyes. Okay, so a 5-day return oscillator has struck us with a bad div later on. It's been a few candles out. We've worked up quite high. This play happens in these regions at the mean reversion point. So you can see once it mean reverted to the upside over here in this, pretty much this candle price action, the longer term one mean reverted to the upside, it's just been a lot more buying power. Vice versa, once our slower return oscillator moves to the downside, so there's a super scalper, pretty neat, then we can see that a majority of selling pressure on the 5-day just drags it down. So in the same effect, this only plays out once we've had our mean reversion point. Okay, so you can look for your first short into this region once our 5-day starts to come in. But one thing we got to watch out for is the ebb and flow of volatility, and that is in the bottom right here, which is called Shannon Entropy. Shannon Entropy has just been contracting whilst negatively correlated. So at the same time that this thing starts to pull out of the box over here, we'll go have a look at Shannon Entropy. Shannon Entropy just started its contraction phase. It's been very, very sketchy. Obviously, there's a lot of wicks, but its general term has been contraction phase, and the majority of it has been, I'd say at least 95% of the time, has been, whilst Pearson correlation is negatively correlated, which means that you're going to look for positive drift, which means price action is going to float up. Okay, naturally there's going to be, how it works, positive drift. If you're an algo and you see positive drift in the order book, but you want to sell, you're going to lift your bid because you naturally know that there's going to be a whole bunch of buying algos that are going to buy up retail, but you can still get a very good price if you want to sell. So let's say you can sell $4 higher or $10 higher if it's Bitcoin, just because some positive float came in on the 1 minute. Like, if you're going to observe these things, you don't have to change your whole position. You just get a better exit, or you get a better entry, depending if it's negative float, and now you have to go long. You can watch it bleed your indicator out, right? So until the next ebb and flow come in, which will be an expansion on Shannon, right? And then we got to pick a side. is this thing going to break our range to the downside here, or is it trying to break its range to the upside? You will look for a mean reversion point to start to be defended here in the next 2 5-day candle prints. If that starts turning around, or there's a green flash, if this turns a little bit green, and then we go look at our Pearson correlation to see if positive drift or negative drift is going to prevent this from happening. This is number one weighting when it comes to me, and my VRE levels, right? This tells me how long until the rest of the market is starting to now get the trend, okay? This is telling me, okay, we're starting to trend into the mean reversion point, and we're gonna break through it, right? But until now, it's contracting, and there's positive drift. So a lot of the dumps that will be coming in, until stated otherwise on the 5-day, have bought and algos behind it, okay? It's not going to be retail or some guys with a couple of grand defending this XRP market. No, if you look at the order book and you see the orders come through, they're spraying the order book with like $100 orders, man. But they just do it like 1,000 times in 3 or 4 seconds. Just bzzz, and he shot it through. So he's arbitraging across a whole bunch of exchange, whoever these people are. But that's how they're clearing this, and they do it through positive and negative drift. Because if he has to clear, he's not going to leave 10 grand in the book on a limit, on a sell limit. He's going to send it through as an iceberg order, okay? And an iceberg order, you'll be able to program so that it doesn't get wrecked by positive or negative drift. Okay. Anyway, so that's how this general play is we're looking for contraction, and then the next ebb and flow is an expansion. And if this goes red and it's still negatively correlated, then this is going to continue down, right? Then this is more than likely going to go significantly negatively correlated. Then we're going to look for continuation to the downside. But if this expands and this starts to turn around, we'll first see like 1 or 2 selling candles if this goes red, because it's still negatively correlated, right? But as soon as Pearson correlation hits this little white line, the mean, and breaks to the upside, and that is expanding, that can rip you out of these regions. But until then, our return oscillator still needs to find a point to base off of. We've just broken into our downside trend cloud over here. Our returns are negative, at least 1 standard deviation. We're at a random point within the market, and a bunch of stacked percentage returns have triggered their outlying points and are now starting to, like, I forget the word, consolidate in this region. Okay, so that's the 5-day. Then we're going to hit it up on the 12-hour. I'm not going to drop through every single time frame as I usually do. There's confusion. So this is going to be a little bit of confusion. So yes, we'll have some wicks coming in. What are we waiting for? Return oscillator looking like it's mean reverted to the downside already somewhere up here on this candle. Was it moved to the downside? We've had an outlier point come in. We haven't broken that with a candle close. This is getting absolutely bouquet-caked, looking to break into the trend for more expansions to the downside. Okay, confused. This all looks gravy that you want to jump in and short. The move has already happened. Okay, we're looking at Shannon now. We're going to go task Shannon for the job to tell us what is happening here. Shannon is increasing and then moving into, both of them are moving into negative correlation. So expanding, so that the next print in an hour, where did I see it? An hour and 10 minutes. If it prints like this and that goes red, that carries on down. If this contracts, which means it goes green, and that carries on going down, that means it's going to naturally float up. So we can see that the 12-hour is confused, whilst the 6-hour is looking for a move for continuation. We have a return oscillator that's jumped off of an outlier. We have this contraction phase. The flashes have stopped. So that you could have, if we were live and we could see where the flashes stopped, we'd have been able to make a better entry. Contraction positively correlated, that's this candle to the downside. Okay, we're looking for an ebb and a flow. 3-hour contraction. If this carries on doing its thing for 3 candles to the downside, was contracting, that's still going to add negative drift. So this might start to expand to the downside. Now we're going to go put on the 90 minutes. So we've had a shuffle to the upside, contraction positively correlated. If you were a bull, what you would look for is you could maybe not buy here, but you could buy here, right? I know it doesn't make that much of a difference, but on another coin it could be a dollar difference. And it's trading fees. Solana could be like 10 cents, whatever, however volatile it is. So 90 minutes, also a little bit confused. 45 minutes, also a little bit confused, because both of them, these two are contracting. One is positively correlated, one is negatively correlated, sideways. See, we have a doji. It's not indecision. It's just that these things need to print, and then it won't be a doji. Okay, and we'll drop it to the 30 minute, and then we'll go back to what we were saying in the beginning. Contraction positively correlated. This is looking for its mean reversion to be defended. Have we got a VRE level on the region? Price action is below the VRE level. I'd say this is going to be, it would be a silly run. But if you, let's see, 15 minutes. No. So here's your play into the tasking, the 90 minute that we're looking at earlier, early. This is the play. So you're going to see expansion here. You're going to see this thing's going green, expansion and positively correlated. That could bump us up into this region. Okay. And then from there we'll have to, what would that do? That's there, that's contracting. Yeah, so contraction was positively correlated. That's what it's going to be fighting. It's going to be fighting negative drift in order to break through this. So if it gets this high, just a couple percent, I need to do it like so, a couple percent, few percentage, 0.21. Does that kick the 45 minute into continuation to the upside? Okay. That looks like it's going to be a lot of signal processing to be done today. So yes, going back to the general outcomes for my overall day, I'll be looking at least another touch to the downside if we fail this mean reversion point. If we start to close above this mean reversion point, you can look for your first scalp to get us back down to this region at this level. And then if there's continuation happens at the green one, we won't say green, we'll make it yellow. Okay, continuation happens at the yellow ones, that's the range for the day. Until then, until any candles start to close above this monthly mean and return oscillators getting defended on a mean reversion point, until that happens, I'll only look for continuation to the upside. As long as these candles are above the mean, and as long as the return oscillator is above the mean and these are closing below my monthly mean, I'll look for trades to the downside. Okay, that's just how I trade that. Back to 5-day. Let's see what's happening there, and then I will switch off. Okay, contraction. This is looking to expand on Shannon because we're pretty much equal. Yeah, so we'll start to see what has to play out. As we see expansion, we'll see if it's gonna flip this or if it's gonna add to this bear div that's been forming here, which is quite worked out. So we'll see if the bears are still here to play on the return oscillator. Returns can start to be increasing to the downside. Our trend though has not confirmed yet. Right. I hope you guys have a good day further.